Hello and welcome to this video. In this video we are going to do a A-level question from paper 4 May-June 2024, variant 41 and 43. Both are same. Question 2 based on standard costing. The question states that P Limited manufactures product EXE and operate a system of standard costing. Budgeted production and sales of product EXE is 11,000 units per month. Its standard data per unit of product EXE was as follows. Selling price is $210. Direct materials 4 kilos at the rate of $7.60 per kilo. Direct labor was 3 hours at the rate of $10.50 per hour. When the actual results of April 2024 were known, the following variances were calculated. Sales price variance was 55,000 adverse. Sales volume variance was nil. Material price variance was $4,290 favorable. Material usage variance was $8,360 favorable. Labor rate variance was nil. Labor efficiency variance was $57,750 and this is adverse. Now let's start with the A bit, and in this the first bit which we have asked is to calculate the actual unit selling price. Before going for this, let us understand two things, that is sales volume variance was given as nil, which means that there was no difference between the budgeted units sold and the actual units sold, and even the labor rate variance was given as nil, which means that there was no difference between the wage rate which was estimated by means of budgeted standards and the actual wage rate which was paid to the labor. So because of this it was nil. So now let's start with the solution. We have been given sales price variance which is adverse $55,000. Adverse variance means the sales price have been reduced by this amount. So $55,000 have been reduced for 11,000 units because these are the budgeted as well as the actual units sold. So for one unit, how much? So the sales price variance for one unit will be 55,000 times 1 divided by 11,000, which will be minus $5. That means the selling price have been reduced by $5 when we actually sold the product. So the actual selling price per unit will be the budgeted selling price which was given as $210. From there we subtract $5. We get the actual selling price as $205. We can solve the same thing by using the formula, because in standard costing we use the formulas and we memorize the formulas. So if this is easy for you, you can use this. That is, sales price variance will be equal to the actual selling price per unit minus the standard selling price per unit times the actual unit sold. So sales price variance is given as negative $55,000, that is adverse $55,000, which will be equal to actual selling price per unit minus the standard selling price per unit will be the budgeted selling price, and this is given as $210 times 11,000. Now we will transpose this 11,000 to the other side where it will be in division. So it will be minus 55,000 divided by 11,000 will be equal to actual selling price per unit minus $210. So here we get minus 5 will be equal to actual selling price per unit minus $210. Now when we take this $210 to the other side, here it is in subtraction, there it will be plus. So here we will get the actual selling price per unit will be equal to $210 minus this $5, which will be equal to $205. So you can do either way, whichever is easy for you. In the second bit of the question, we are asked to calculate the unit selling price which would have given the same actual total contribution in April 2024 as the standard total contribution for the month. So we know for contribution we have a formula which is equal to selling price per unit minus the variable cost per unit. Variable cost is the cost which varies with the production, and for this we take the material cost as well as the direct labor cost to find the variable cost. So for this, let's see what information we have. We have for total variable cost, we have been given the total direct material price variance and the total direct material usage variance. This together will make the direct material variance, and this is involved about the direct material cost, hence we are going to take this. Then we have the direct labor cost. For this we have the total direct labor efficiency variance and the total direct labor rate variance. So we are going to take this and find how the total variable cost have increased or decreased. You see, when we talk about the cost, if there is an increase in the cost, then we get an adverse variance, and if there is a decrease in the cost, we get the favorable variance. So when we want to find the total variable cost, how it has differed, if we see the total material price variance, this is favorable, that is 4,290 was the amount by which the total variable cost have been reduced. And then we have the total material usage variance, which is $8,360. Again, this is favorable, that means this is the amount by which the total variable costs have been reduced. However, the total direct labor efficiency variance is negative $57,750, which is adverse. This means that the total variable costs have been increased by this amount, and the total direct labor rate variance is nil or zero. So now when we add and subtract, we get the total as $45,100, and this is adverse. That means the total variable costs have been increased by this amount, and this is for 11,000 units. As we have to find the variable cost per unit, so we'll find 1 unit how much. So when we cross multiply this, we get 45,100 times 1 divided by 11,000, which is negative $4.10. Now if we see this is negative $4.10, that means this is the increase in the variable cost per unit. Now let's find the contribution. Contribution is selling price minus the variable cost per unit. And here, which selling price we are going to take? We are going to take the budgeted selling price, because we have to find the same standard total contribution. So the standard price, which is the budgeted selling price, is taken here as $210. From there we subtract the variable cost, and here it is negative $4.10. So we take this. So negative into negative, it will be positive. So now we get the contribution same as the standard contribution. We can get this if the selling price is $210 plus $4.10. That is, this amount of variable cost should also be recovered by means of the selling price, so that we can get the same contribution as the standard contribution. So the selling price which we need to get the same contribution is $214.10. In the third bit of the question, we are asked to calculate the actual total quantity of direct material used in kilos. You see, when we talk about the direct material variances, we have two types of variances. One is the material usage variance, other is the material price variance. As we want to find the quantity, we use the direct material usage variance, and for this we have a formula which is equal to flexible budgeted quantity of material minus the actual quantity of material times the standard cost per unit of the material. So here we have been given the direct material usage variance as $8,360, which is favorable. Then the flexible budgeted quantity, how do we get this? We take the actual units produced and sold, which was 11,000. We multiply it with the quantity of material required per unit based on the budgeted estimation, which was given as 4 kilos. So 11,000 into 4 will be 44,000 kilos. Then the actual quantity of material is what we have to find. We multiply it with the standard cost per unit of material. This is the budgeted cost, which was given as $7.60. So now here this is in multiplication. If we take this to the other side, then it will be in division. That is 8,360 divided by $7.60 will be equal to 44,000 kilos minus the actual quantity of material. Then we get 1,100 and we have actual quantity of material in subtraction here. So if we take this to the other side, it will be in addition, plus actual quantity of material will be equal to 44,000 kilos. Now if we bring this 1,100 to the other side, it will be in subtraction. So actual quantity of material will be equal to 44,000 kilos minus 1,100, which will be 42,900 kilos. In the next bit of the question, we are asked to calculate the actual price paid per kilo of direct material. As we have to find the price, we are going to take the direct material price variance, which will be equal to the standard price per kilo minus the actual price per kilo times the actual quantity in kilos, and this was calculated in the bit 3 of the question. So we have been given the direct material price variance as 4,290, which will be equal to the standard price per kilo was given as $7.60 minus the actual price per kilo, which we have to find, times the actual quantity in kilos was 42,900 from the bit 3 of the question. Then we are multiplying here 42,900. So when we take it to the other side, it will be in division. So it will be 4,290 divided by 42,900 will be equal to $7.60 minus the actual price per kg. When we divide this, we get 0.10. Actual price per kg is in subtraction on this side. So if we take it to the other side, it will be in addition. So it will be 0.10 plus the actual price per kg will be equal to $7.60. Now when we bring this 0.10 to the other side, it will be in subtraction. So the actual price per kg will be equal to $7.60 minus 0.10, which will be equal to $7.50. Next, we are asked to calculate the actual hours used by the direct labor per unit. You see, when we talk about the direct labor variances, we have two sub-variances. One is the labor efficiency variance and the other is the labor rate variance. So here when we want to find the labor hours, we use the labor efficiency variance, which will be equal to the flexible budgeted labor hours minus the actual labor hours times the standard wage rate. In flexible budgeted labor hours, we take the actual units produced and sold, as the budgeted and the actual units are same, hence we will take the 11,000 as it is, and then we multiply this with 3. So we start with the labor efficiency variance, which is adverse, and hence it is negative $57,750 will be equal to 11,000 into 3, which will be 33,000 hours minus the actual labor hours times the standard wage rate, which was given as $10.50. So here $10.50 is in multiplication. If we take it to the other side, it will be in division. So when we divide this 57,750 by $10.50, we get 5,500, and then we have 33,000 hours minus the actual labor hours. As it is in subtraction here, we'll take this to the other side, hence we add the actual labor hours to 5,500 will be equal to 33,000 hours. This 5,500 is negative on this side. When we take it to the other side, it will be positive. So the actual labor hours will be equal to 33,000 plus 5,500, which will be 38,500 hours. This was the actual labor hours used for the production of 11,000 units, and we have to find per unit. So for 11,000, it is 38,500 hours. For 1, how much? We cross multiply this. So it will be 38,500 times 1 divided by 11,000, which will be 3.5 hours. In the B bit of the question, we are asked to name the budget which P Limited would have prepared if actual sales unit had been more or less than the budgeted 11,000 units. You see, if the actual sales and the budgeted sales and production differ, then we make the flexible budget based on the actual sales or actual production. In the C bit of the question, we are asked to suggest 4 reasons why the company uses standard costing. You see, in standard costing, we find the standards and make the budget, and this budget can be used as a benchmark against the actual results, and this can be a means of comparison between the actual results and the budgeted estimation. And because of this, there will be a reduction in costing as well as the business can be controlled by means of the standard or the benchmark which we make when we make the standard budget. Furthermore, it helps us in making the decision as we know what are the standards or the standard budget to be followed, and this also helps the staff to be motivated because now they will have the targets when we have a standard budget, and they will be very much aware that what objectives they have to achieve, and as the targets are planned and set, this will help them to work more efficiently. Then this is also useful to estimate the future requirement of material or labor. It helps to simplify the setting of selling price, and as well it helps us in coordination of different departments in the business when we set the standard and make the standard budget. In the debate of the question, we are asked to advise the directors whether or not they should use spreadsheet in the preparation of the company's budget. We have to justify our answer. You see, if P Limited uses the spreadsheet, then they will have various benefits, like spreadsheet helps to have mathematical accuracy and this will reduce the errors. Furthermore, the calculations can be done in a very speed and accurate manner. Then here recalculation can be done automatically if one variable is changed, and security can be enhanced if we use the passwords. Furthermore, information can be easily sent from one office or one department to another, and multiple users application may also be available, and sort and select function may be also useful. However, there are certain disadvantages, like some staff may not be familiar with the spreadsheet software, and the budget will still only be good if the estimation are made which are accurate and good, and the security of data may be compromised because of hacking and virus, and there may be error in the data as this data is entered manually, and if we use incorrect formula, then there will also be various errors. However, when we consider the advantages of using the spreadsheet, they are more than the disadvantages. Hence, I would advise the P Limited to use the spreadsheet in preparation of the company's budget. With this, we have completed the question. Thanks for watching my videos and have a great life.